Hey guys, hope everybody's doing well today. We are going to go over my covered call, buy right wheel strategies, my PMCC, see how everything is doing. I got a new position coming up. Probably can see it on the tabs above, but we'll go over that and check it out. So if you're new here, please like, share, subscribe, do all that good stuff. Down in a pinned comment below are all the affiliate links that you can use to support this channel. Right now, M1 Finance is giving away $30 to any new sign up for M1 Finance. So if you are new and you open up a new M1 Finance using my link below, you get $30 and I get $30 if you deposit $100. Win-win. Also, my Amazon link's down there as well. It'd be great if you find value in this to support me in that way. That'd be much appreciated. So we'll just get through these positions. There's 4 of them in total. And we'll start with the Jets. And the Jets is an ETF of airlines, right? And I believe that there's still some upside left to airlines, right? I think as we open up a little bit more, people are going to start traveling a little bit more. There's some risk there, depending upon whether some of these companies implement vaccine passports. Now, I'm not going to get into it too deeply. I don't want to get that political here, but I still feel there's upside here in this sector. It's ran up quite a bit, but I still like it. So if you noticed, I got called out of my position. I got called out of my position on Friday, April 9th, which is shown right here. I was sold 100 shares at $27 a piece. So that also means that my covered call that I sold last week on it, that expired on the 9th, also expired, and I just kept the entire premium from that contract. So today, April 12th, I opened up a new put contract on it, and I have it expiring in 2 weeks, so we won't be updating this for another 2 weeks probably. And at the time, the price of the stock was $26.75. I opened up a strike at $26 for a premium of 33 cents. Paid commission of 72 cents. So that total premium was $32.28. So right now, I do not own any shares in this. As you can see, it's closed as of 4/9. So I have $50 in loss in the stock because I was assigned originally at $27.50 and I sold at $27, but I collected these premiums from it. So as the position sits right now, I have an adjusted cost basis of $26.58, and premium received of all 3 of the contracts is $141.84. So total profit of $91.84 for a total return of 3.34% as of now. And I opened this position up on March 26th. So that's that. In 2 weeks, we'll see if we become owners of Jets or if we have to sell another put to try to establish another position in it. Next up is another stock that got called away, and that was my Palantir position. Palantir got called away. If you look right there, I had a covered call expired on the 9th at a $23 strike. So those got called away at $23, which you'll see right here, the confirmation. And then what I did this morning on Monday, April 12th, I sold another cash secured put to try to establish to get back into the position. That's the other side of the wheel, right? Of course, it's going to always happen to you. Once you sell a put, the stock's going to drop, and that's what happened. But that's okay. We're still good. I did a $23.50 strike with an expiration date of April 16th, which is this Friday. I collected 50 cents on that premium, 69 cents commission, $49.31 in that total profit of that contract. So you'll see I do not own the shares anymore, exited at $23 from that call. So we're trying to establish a new position of shares by Friday, or the contract expires worthless. So right now we have a adjusted stock basis, cost basis of $21.04 on Palantir. And right now this is a pretty good return here, $145.91 in premium received, $50 in stock profits from the sale of those called contracts, or the shares that were called away from that covered call contract on April 9th. So a total profit on 195.91, 8.71% return so far on Palantir. So we'll have to update next week to see if I get assigned on these shares or if we have to sell another put. And if we just keep selling puts, that'll be fine with me. If we can collect $50 a week to not own the stock, I'm perfectly fine with that. Next up is a brand new position, and that is in Oxy. That's ticker symbol OXY. Energy, oil companies in particular, I feel still have some upside, just kind of like jets. I think all the travel, even the hospitality, restaurants, some of the restaurants have ran up quite a bit, but all that, pre-pandemic stuff, I think there's some pockets there that still have some upside. And I think oil and energy is one of them. We got higher oil prices coming. They've been ticking down here in the past few days, but that just means more profits for these companies for the most part. So on April 5th, I sold a put on Oxy. At the time, the price was $25.50. I had an expiration date of April 9th. I did a strike of 25. I received 34 cents for that put contract. On April 9th, Oxy settled below $25. I forget how much it was, but yeah, that's neither here nor there because I had to buy 100 shares at $25, which I did here. You'll see $25 assigned costs, one block of 100 shares. And then Monday, which was today, April 12th, I sold a 2-week out covered call on against those shares with a $26 strike, collected 52 cents premium on that on one contract, 67 cents commission. That was a call, so $51.33. So currently right now my adjusted cost basis on Oxy is $24.15. That's basically $84.54 of the premium that was received, and we're down $77 on the stock itself. But if this were to reach $26 in 2 weeks, this is what it would look like as far as a return. So we have a potential return of 7.38% if Oxy gets to $26 by April 23rd. If not, we'll just continue to sell covered calls on it. Or, who knows? We might have to sell another put if Oxy keeps going down, and to try to lower our cost basis if we cannot sell covered calls above our cost basis well enough to cover, the difference, because you don't want to sell a covered call below your cost basis. That's the big no-no. We'll move that back. And then last but not least is my lone PMCC that I have going on with Pfizer. Now, if you look, was it last week or the week before? I think I shared this with you that I took off. I had 3 calls. There was a big mess with Pfizer and my PMCC because this tracker had some bad calculations in it. I think we got them all worked out. So it was making me think that I was selling above my cost basis when I wasn't. So that's why you'll see some of these negative numbers here, because I backed out of those positions and reset the strike price. But my most recent one was March 19th. I sold 3 covered calls on my Pfizer position with an expiration date of 4/16. I was able to exit those on April 7th at 3 cents a piece. I just didn't want from April 7th to April 16th for these contracts to be sitting out there. And if Pfizer were to run up, I didn't want to be caught with that. I'd rather, for 3 cents, I'd rather have the freedom of Pfizer rising up and above the strike price, right? Of course, it probably is not going to do that, but it's just peace of mind. So currently, we have 3 leaps purchased on Pfizer. My leap cost basis is $10.79. My short strike, which I sell my covered calls on, I have to sell my covered calls at least above $35.79, so the 36 strike and above. But right now, Pfizer's been running up. They have earnings coming up, so I don't have any covered call positions opened on Pfizer. I want to let it run. And if you look at it right now, I have currently a 10.53% return on my Pfizer position. $196.55 is coming from covered calls, and $165 is coming from profits from where the leaps are at the moment. Because my cost basis on the leaps is $10.79, and right now, last current price was $12. So I'm just going to leave this alone until earnings. Maybe it'll run up. Maybe I'll close the position. Now, here's the power of a PMCC. I'm not saying that this is for every stock, but certain stocks I think work with PMCCs, and it's usually stocks that are trading down at their lows. They're kind of boring stocks, slow stocks, right? But definitely solid companies. You don't want to do this on speculative companies. I don't believe. I won't do them. But here's the power of it, right? Look there. I got 10.53% return on my money if I were to close out these leap contracts today. Now, if you look at Pfizer, right, we'll look at the performance of it. I started this position January 26th, right? And I have 10.53% return. So if I were to, I'm going to go to my ETF channel. This works for stocks too. And I'll go January 26th through the end of April 12, 2021. The same period that I've been holding these PMCCs, these leaps, and doing these cover calls. And let's see what the performance was if you just bought shares and sat on them. So we look here. It's not a good picture. You look at Pfizer, right? Starting price $37.31 on January 26th, end price of $36.60. So your total return, you're still in the red, 0.84%. Right? And that's if you bought the shares and just held them. Yeah, you probably would have got a dividend in there, but not much, right? So, for me to have a 10.53% with less capital at risk, because I only have $3,400 invested in these 3 leaps. Back in January 26, you couldn't even have bought 100 shares for that amount of money that I have these 3 leaps in, and I'm making 10% on my money. So I think that's key with PMCCs is patience, buying solid companies and buying them when they're kind of depressed a little bit, right? But they have to be solid. That's in my opinion. And that's what's working here. So I've been trying to open up another position, another PMCC, but yeah, I'm just not finding the opportunities just yet. So that's it. Those are my 4 covered call positions currently and PMCC. If you have any questions, leave them down below. Like, share, subscribe, do all that good stuff. Leave me a comment down below. Check out the pinned comment and try to use some of those affiliate links if you like what you're hearing. So you guys have a great rest of your week, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.